here's Aabha in conversation with Pirojsha Godrej of Godrej Properties on how and why they are optimistic about the real estate market, where are they aggressively putting money to work, and how exactly are they looking at spending 5,000 crore in buying asset and deploying the rest of the Godrej PE Fund, which has an AUM above $1.5 billion.
We're here at Godrej 1, the headquarters of the Godrej Group in Vikhroli, Mumbai. Here to meet the chairman of Godrej Properties, Pirojsha Godrej, who's a very difficult one to catch. The Godrej Group touches 750 million consumers in India, and it's great to have the opportunity to chat to you today, Pirojsha.
Lovely,
Thanks so much for
lovely
joining
to do
us.
this, Aabha. Thank you.
So, let me first begin by asking you what's on top of everyone's mind, which is the demand scenario currently. When it comes to real estate in particular, what's it looking like on both the residential side as well as the commercial side?
Yeah. Aabha, I think the sector is going through a tough time. Actually, the commercial real estate sector has been going through a positive few years, so I think that's been by and large doing okay. I think on the residential side, really, it's been a declining market now since about 2012. So I think a lot of individual developers and the sector as a whole are struggling. But what has also been happening, which I think has benefited Godrej Properties and several other developers, is that there has been a lot of consolidation in the sector. So the larger developers typically in each city are seeing pretty good performance. For example, the second half of last financial year was by far the best ever period we had for our own sales. But there's no question that if you look at the sector as a whole, both the demand environment and the liquidity environment are quite concerning.
Absolutely. So for you in particular as a business, how do things stand right now across your projects at this point of time? And I know that you've been delivering quarter on quarter, but how are you comparing it, let's say, in terms of how it is versus what it was 6 months ago?
I think honestly we're not seeing much difference for our own projects from now or 6 months ago. I think we're quite happy with how launches are going. We are seeing overall this period as one that presents tremendous opportunity because again, the demand environment for us has been quite positive. We've actually raised some equity in anticipation of being able to kind of invest at the right valuations in this market as other developers are looking to monetize their projects. So I actually think the next 12 to 24 months presents a pretty unique opportunity for Godrej Properties to do our best at this difficult time to sort of capitalize on growing our own market share.
So is it the price point, Pirojsha, that you're managing to capture? Is it the overall product? What is it about your projects that's actually working in a market like this?
So I think there's no one thing that solves this, but yes, certainly I think getting the right product, making sure that we really try to understand what in each individual project that we're doing, what that location, what customers in that location really want out of a project, getting that right. I think making sure that we're appropriately managing the balance sheet, so we're not stretching ourselves, not putting any doubts in customers' minds about our ability to financially withstand any pressure that might come as a result of market conditions. And really doing our best to build on the Godrej brand and all that it stands for in terms of trust and good governance.
Sure. So when you were talking about key markets, metros, non-metros, again, what are the differences in the demand scenario that you're observing?
Yeah. So our focus for the last few years has been primarily on the top 4 markets in the country, which are Mumbai, NCR, Bangalore and Pune. I'd say within those, NCR has probably been the weakest if you look at it from an industry perspective, and as is well known, I think a lot of the developers there have struggled. A lot of apartments have not gotten delivered, even with 10-year delays, and there's been a huge amount of issues. But somewhat surprisingly, it's actually for Godrej Properties been our best performing market over the last few years. We actually sold more in NCR last year than any of our other markets. Mumbai has been a market that's been, not as bad as NCR, but also has had its share of pain points, particularly in some of the luxury products, which fortunately we haven't been too focused on. And I think the Bangalore and Pune markets have been generally steadier and better performing. You haven't seen prices going up too much, but demand has been relatively solid in those.
So again, if we were to pick up NCR, for example, what really worked there? also demand, for example, on under construction projects, vis-a-vis completed projects? Are buyers a little bit more apprehensive today? How are things shaping up?
Yeah, but there's no question. I think people are concerned about buying under construction properties. And I think what we're seeing is that, most of the customers we speak to will tell us that for an under construction property, they're not really looking beyond the top 3, 4, 5 names in the industry, because they just don't see the value in taking that risk or uncertainty of delivery. But I think fortunately, given the corporate brand we enjoy, given the delivery track record we have within the real estate sector, I don't think we're seeing any challenge for under construction properties. So most of our sales continue to happen when we launch the project, which happens as soon as all our regulatory approvals are received.
Okay. And, you've also taken the partnership model for many of your projects. How's that working out? Is that something you plan to stick to going forward? Because as you mentioned, you may not have had some of the concerns as some of the other competitors out there, but what would the cash flow situation look like, let's say, over the next 3 years?
Yeah, I think, the partnership model that we followed has held us in good stead.
Yeah.
I think it's what's allowed the company to grow quite rapidly, from probably not being amongst the top 10 developers by value of real estate sold to being now amongst the top 1 or 2. And I think doing that with maintaining kind of a prudent balance sheet and not overstretching ourselves to fund rapid growth, because buying land can very quickly become a very capital intensive game. So I think our philosophy has been, to the extent possible, to use cash flows generated from the development to pay for that land through various partnership structures.
Okay.
That is something we certainly continue to want to focus on. At the same time, for the right projects at the right valuations, if we do see distress in the market because of the overall liquidity environment, we're quite happy to use that as an opportunity to also acquire land at the right price.
So is that going to change the balance on the books over the next, let's say, year and a half, that you're planning to go really aggressive on that?
We definitely would like to see, the greater investment over the next couple of years. We actually did a QIP where we raised a couple thousand crore in the first quarter of this financial year. Now, temporarily, the impact of that was to reduce debt on the balance sheet, but really we have no interest in having debt at as low levels as we currently do, because we'd really want to use this as an opportunity to strengthen the portfolio. In a long cycle industry like real estate, typically we think a counter-cyclical investment strategy makes a lot of sense. So, when everybody else is struggling a little bit, when valuations are at the right level, that's when we think we should be as aggressive as we can in terms of expanding the portfolio, and then hopefully launching and building these projects as the market improves. So we think there's an opportunity to deploy about 5,000 crore into new projects over the next couple of years, and I think that's a very important focus area for the company in the near term.
Sure, and that's a big number as well. Talking about the environment, then, the pain points still persist. We've had some major announcements from the finance minister, as you know, just very recently. Do you feel that there's going to be a shift in sentiment with regards to, people actually now willing to perhaps go out there and spend, seeing that shift in liquidity spending now going forward?
I think there's probably no one silver bullet, but I do think the corporate tax cut announcement was a significant one. I certainly think it will help boost sentiment in the economy as a whole, will certainly help boost sentiment within corporates that are sort of thinking through their own investment plans. Is it immediate solution that will tomorrow result in seeing increased consumer demand? Probably not. But has it set in motion a cycle of events that likely end up with that result? Probably yes. I think, and the way it probably plays out is that you will see greater corporate investment that will result in greater job both creation and confidence, which in turn will be what spurs consumer demand. For the real estate sector, I think it's a matter of time before demand improves. I think, first of all, you've had now 6 or 7 years of a cyclically weak period.
Sure.
Over that period, you've actually seen affordability of real estate dramatically improve.
Sure.
If you look at it, interest rates over that time have come down by anywhere between 300 to 400 basis points. Property prices have been probably flat. In some markets like NCR have actually come down a lot. People's income, if you assume 8 to 10% growth a year, have grown by 50-60%. Difficult to predict.
Yeah.
I've been quite consistently wrong about the timing of it. But look, I think again the underlying factors are in place. The affordability of real estate is quite good. India's economy, again, is going through a bit of a tough patch, but I don't expect that that will last more than the next 12 to 18 months. I think that's probably the time frame where I would see this kind of turnaround happening.
And do you see that economic activity, of course, then completely negating the effects of the slowdown that we have seen that continues to impact industry? So are you seeing an overall improvement for sure coming in, let's say, in the next year or so?
Certainly that's our bet, Aabha. We wouldn't be putting 5,000 crore of new capital to work if we weren't very optimistic about the prospects of the sector. I think it's a sector that is very cyclical, both here in India and globally. It's always a cyclical sector. And the reason for that is that it takes quite a while for supply to adjust to prevalent demand conditions. And what I mean by that is that if you've committed a project and started construction on it, and suddenly demand deteriorates, you don't have much ability to pull that supply. Similarly, if tomorrow we expect there to be much improved demand, we don't have ability to create that supply in that shorter time frame. You have to acquire the land, go through all the regulatory approval processes, design the project, launch the project. So that takes its own time, which again is the whole reason that the sector is so cyclical. And anecdotally, every skyscraper in the world has apparently been delivered in a recession, because such projects are almost always conceived of in good times, and by the time it actually takes to deliver, inevitably the market conditions have turned. So our bet is that there's nothing different about this cycle. We are going through a tough period, but this too will pass, and that there's a lot of talk of oversupply at the moment. If you talk to any developer or analyst, it's so much supply, so much supply. Our view actually is that it's quite visible that 2-3 years from now we're going to be in an opposite period, because you can probably count on one hand the number of developers that are actually investing in new projects at the current moment. So once the older projects that represent the current stock of supply get absorbed, what you're going to see 2 or 3 years from now is that there won't have been enough new projects planned in this period, which again will lead, we think, to the next upcycle.
Fantastic.